Welcome to the African Topics. My name is Charles Miano, investment analyst at Nabo Capital, and we'll be covering the week between the 19th and 23rd August 2019. And what we saw key was West Africa was the best performer last week, and this was driven largely by Nigeria, which was up 3.7 week to week. And the driver particularly for this was the banking sector. And looking at the banking index particularly, it was up 9.5%. And this is on the back of solid results, solid half one results for some of the top banks in that particular market. However, the laggards were Zimbabwe and Kenya, losing by about 3.1 and 2.1% respectively. Something to note, however, is Zimbabwe is the best performing market year to date from a USD perspective, and it is up 19.2%. And the reason for this is attributed, one, to the currency crisis that we've seen Zimbabwe go through, especially over the last couple of years. And this has led to investors placing their money in equities or placing their money in the stock market or in an asset class that is actually growing relative to inflation. And so equities now are viewed as a safe haven asset and as well as a form of inflation hedge. So we've seen the stock market perform robustly. However, the difficulty remains that investors are having difficulty getting their money out, and we've seen the switch from the dollar now to the Zimbabwean currency note being the official tender, and therefore there is shortage of currency in that space. Nevertheless, Zimbabwe still remains the top market in Africa. And key news for last week was Egypt cut their rates for the first time this year. They cut it by about 150 basis points. They cut it on the lending as well as the deposit. So the deposit was cut to 14.25%, while the lending rate was cut to 15.25%. And to note is inflation as at July was the lowest at 8.7% over the last 4 years in Egypt. And the currency is one of the best performing, and by best performing I mean performing or getting stronger relative to the US dollar, and it is up 7.6%. And this cut has some benefit, or is perceived to have some benefits for the economy. Specifically, it will lead to a capital expenditure credit cycle. In the past, or in the recent past, over the last 2 to 3 years, the credit cycle has been more geared towards working capital financings as opposed to capex needs. So this could, with cheaper lending, this could lead to a spike in growth, especially when it comes to industrial growth, which translates as well to consumer spending and consumer growth in terms of how much they're willing to spend. So that could be a positive for that. In addition to that, Egypt remains one of the most profitable carry trades in the margin and frontier markets, and specifically when you're looking at the T-bill. T-bill rates are one of the highest, especially within Africa, as well as the strength of the Egyptian pound relative to the dollar. So that remains an attractive opportunity for investors, or specifically fixed income investors. And looking at our performance, and this is the NABO Africa Top Picks. So basically our 10 best stocks relative to the benchmark, and the benchmark here we're using the MSCI Africa Index ex South Africa. And from inception, which is the beginning of 2017 until now, on a USD terms, our stocks have performed at 56.7% relative to the index, which has performed 14.3%. So we see quite a significant difference, and just driven by especially by our active stock selection. So with that, looking at now largely which are the markets which have performed best year to date, again from a US dollar perspective, the best performing market is, as I mentioned earlier, Zimbabwe, 19.2%, followed by Egypt at 18.9%, and then by Tunisia at 5.6%, Morocco at 2%, and Uganda at 3.1%. So and Rwanda closing out the positive numbers at 0.9%. So in total, from the markets that are positively performing are Zimbabwe, Egypt, Tunisia, Morocco, Rwanda, and Uganda. However, looking at the bottom performers, you have Zambia at negative 22.8%. You have Ghana at negative 18.8%. You also have BRVM at negative 13.1%, followed by Nigeria at negative 11.2%, and touching on South Africa with negative 3.6%. So largely, yeah, you have more bottom performers relative to the positive performers, so shows the struggling situations in the equities market thus far. So thank you very much, and you've been watching the African Topics.